Well, that signifies the end of trading, and it's time to take a look at the markets analysis for this week. And I'm joined by Harrison Gitao, who is a senior research analyst at Apex. Many thanks for joining us.
Thank you very much for hosting me.
Well, interesting week. We are seeing one of the biggest moves is, of course, Safaricom. They did release their results. But before we touch on Safaricom, let's talk about the NSE 20 share index. This week, it's actually at 3,662.98. And it's actually down compared to last week by about 0.74%.
Yeah.
What do you read into this?
The decline has mainly been attributed to a few components of the NSE 20 actually declining. We've seen dips in ARM, we've seen dips in Barclays, and we've also seen dips in Scan Group. But looking at the NSE All Share Index, it has gone up by about 1.8%, driven by the recovery in banks and Safaricom. Yeah.
And Harrison, let's talk about the top movers. Safaricom moving about 14 million shares in trading, and of course it still remains as the largest capitalized stock.
Yeah.
And talk to us about the results they released. There's a lot of hype around data and of course internet services.
For Safaricom, the results were largely in line with market expectations. And basically what they announced is has been reflected in the activity on the counter, the 14 million shares traded for that week. For Safaricom right now, they're acknowledging that SMS and voice are mature products and are looking more into the new stable revenue streams, that is data and M-Pesa. Yeah.
And speaking about M-Pesa, mobile money is also one of the key growth drivers for Safaricom. We did see this talk about having a chat service under M-Pesa. And it seems the company is on a very strong growth trajectory, remembering that just a few weeks ago we saw the stock hit the 30 shilling mark, which defied a number of odds in the market.
Yeah. For M-Pesa, the opportunities still lie. Seeing that M-Pesa has been very successful in the country, but still about only 10% of the transactions made in the country are cashless. So there still remains a big headroom for growth in M-Pesa. When it comes to Bonga, what Safaricom are trying to do are trying to enhance the customer experience when using M-Pesa. So they are coming up with services like Bonga, M-Pesa One Tap, and QR scan code to ease the process and the steps made while using M-Pesa.
But there's also the competition element, Harrison. We saw Telkom Kenya selling off some of its towers. And there's also a lot of push by the other players like Airtel trying to merge with Telkom. Does this perhaps prove a challenge for Safaricom's dominance in the market?
What management attributes to that is that it basically will see the competition stop offering very rich offers, which are not sustainable in the long run. So with the competition possibly merging, they'll have, Safaricom will have a bigger competition to deal with. But on the flip side is that Safaricom may ease being dominant, and that will see the regulator come off its back as a dominant player.
And of course, good news to consumers. It will lead to a price war.
Definitely.
Well, enough about Safaricom. Of course, also bearing in mind that Bob Collymore did address the shareholders from London, and he was very optimistic that he will be coming back soon. Well, let's take a look at the top gainers this week, Harrison. I'm seeing CIC Insurance, the stock is up about 10.75%. Kenol Corbil also doing well, just about 8.3%. NIC Bank also making some interesting moves. The stock is up 6.16. And let's talk about the NIC Bank. We've seen a lot of activity coming in from the banking sector. Talk of the review of the rate cap is still underway. But what's perhaps defining how NIC has been trading, bearing in mind they've been very successful on asset financing?
For NIC, they went ex-dividend on 30th of April. So they went ex-dividend and ex-bonus. So there was a market overreaction to that. And this week's performance is as a result of last week's overreaction. So the increase is actually a correction in the market.
All right.
But with the review of the rate cap, there is a proposal that they want to establish a base rate for the whole economy and then work a risk premium based on each individual's credit rating.
Wait a minute, you've lost me there, Harrison. Yeah. What does this mean for the borrower who just wants to access their loan and, of course, after the rate cap perhaps is repealed? What then stands for them?
The proposal is the proposal that is out right now, that is still being worked on by the Treasury, is that they establish a base rate. Then from that base rate, they come up with specific bands, which are risk premiums in addition to the base rate, depending on the credit rating of the specific borrower.
All right.
So if the specific borrower has a good credit rating, they get lower rates. If the credit rating is not as strong, maybe for a risky borrower, more so in the SME sector, they get a higher rate.
Okay.
So right now, what the situation is that there is cheap credit that is not available because the borrowers are actually being deemed as risky.
Indeed, interesting. We hope to see how this pans out.
Yeah.
And as we wrap it up, Harrison, I'm seeing the cement makers are having a tough time. If you look at some of the top losers this week, I'm seeing Athi River Cement. The stock is down by 19.33%. East African Portland Cement also not doing well, down by 6.8%. Yeah. And what's really the story around the cement industry?
For East Africa, for ARM Cement, the numbers are not yet out. They requested for an extension so that they can finalize on the full year. But the recent communication they've had is that they're still looking for a strategic investor. And with the news from the economic survey that cement consumption contracted last year in the Kenyan economy by 8.2%, the market is just inferring as to what will be the situation for ARM Cement. So that explains the significant decline. For Portland, they are still trying to sell a huge chunk of their land so that they can ease operational pressures on their operations. Yeah.
Interesting insights there. Many thanks, Harrison.
Thank you very much.
Always a pleasure having you on the program. Well, let's take a look at the Markets 101 for this week. Well, it's time now for my favorite segment, and that is the questions from the street. Let's take a listen in on what is the question for this week.
My name is Sue Beth from Kiambu County. I would love to know what is demutualization.
Thank you very much for the question. Demutualization is a process where a corporation changes its ownership from member-owned to ownership through shareholding. Commonly, the corporations that have demutualized themselves are exchanges, the NSE, the DSE, and the JSE of South Africa.
Well, we hope that your question has been answered satisfactorily, and we definitely appreciate your questions. Well, let's take a look at the historical fact for this week. Well, that brings us to the end of this week's episode of The Trading Bell. We do appreciate your feedback and, of course, keep interacting with us on social media using our Twitter handles at KT News, or you can tweet me at Agina Abi. Remember to also follow us on Facebook under the name Trading Bell. Well, next week we'll be speaking to the Chief Executive Officer of the Capital Markets Authority, that is Paul Mudhaura, to just pick his sense of what is happening in the markets And what will be different in 2018? Well, that will be marking the last installment of our Building Africa Financial Markets Seminar series, which we've been running for the last few weeks. From me and the entire team, have a lovely weekend. My name is Abi Agina. Thanks again.